Hello, I'm David Chaston with 989, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news markets are ignoring the deepening standoff between the US and China on trade. But first, there was another dairy auction overnight, where 39,000 tonnes were sold into a falling market. That volume was 15% higher than the same auction a year ago, but prices came in 15% lower on that basis. Compared with the previous auction, prices were 1.3% lower in US dollar terms and 1.75% lower in New Zealand dollar terms. The key whole milk powder price was 1.8% lower. This overall result was not as tough as the derivatives market was signalling, but it isn't positive either and will put downward pressure on farm gate payout prices. It is now 8 consecutive auctions where we've not had an increase, and it's starting to mount up, building up to a 19% fall in that time. In New Zealand dollar terms, that decrease is less than 10%, reflecting the declining Kiwi dollar. The Americans have pulled the trigger on another $200 billion of tariffs on imports in China, making these goods more expensive for their consumers, and that's whether they end up buying them from a Chinese supplier or a local American one. These new taxes will become effective on Monday, September the 24th. China's retaliation hit $60 billion on trade, and they have limited options to go higher by tariffing US goods. But they could tariff their exports to the US, hitting them in key consumer places that would hurt and for which the US has few practical alternatives, at least for a couple of years. Rare earth metals don't seem to appear on the US tariff list, and another key card for China. It is likely that key US policymakers' views that China is out of bullets is just wishful and shallow thinking, and their expectation that a deal in future is coming is equally wishful now. Equity markets in China seem unfazed by the US actions, rising an impressive 1.8% in Shanghai after the American announcement. Today, even Wall Street is up, but a more modest 0.7%. And in China, the African swine fever outbreak is widening. The seriousness for China is growing. In Australia, their largest bank has said it's pulling back on making property loans for self-managed super funds, a move that will worry real estate industry. And at their Financial Services Royal Commission, a leading insurer has admitted it misled more than 2 million customers about its travel insurance products. Allianz Travel Insurance has sold in New Zealand also under a number of brands. The US Treasury 10-year yield is up today and now just at 3.05%, and actually that's a 3-month high. One thing markets do see from the US-China trade escalation is higher US inflation and therefore higher Fed rates and sooner. The two-turn curve is wider at 25 basis points. The Aussie government 10-year is at 2.66%, up 3 basis points. The Chinese government 10-year is at 3.67%, up 1 basis point, while the New Zealand government 10-year is at 2.63%, that's up 2 basis points. And gold is down. It's down $4 today at $1,197 an ounce in New York. US oil prices are up today at just under $70 a barrel. The Brent benchmark is also up at $79 a barrel. And the Kiwi dollar is starting today unchanged at 65.8 US cents with no reaction to the dairy auction. On the cross rates, we're marginally softer at 91.3 Aussie cents and unchanged at 56.4 euro cents. That puts the TWI at 69.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.